Hasmathullah from G.K.Jain school. Today we are going to continue with the third chapter of Accountancy 12th standard, which deals with the accounts from partnership firm, fundamental aspects. Okay, already we have seen the various relating theories around that. Today's topic we are going to see the fluctuating capital method. In our previous classes we have saw the fixed capital method. Okay, in the fluctuating capital method, what is the method we are following here? See, in a simple way, partnership firm is a huge business aspect. From the sole trader, we are converting the business into the partnership firm, and it plays a huge role in the business making. Why? Because the partnership firm is a firm where lot of people will be involved, lot of capital will be involved, and lot of profit sharing will be there. In this scenario, we need to know that which partner is getting what profit. In that scenario only, this fundamental chapter of the accounts is all about. In the last class, we have saw the fixed method of capital account. How the partner's capital account will be maintained under the fixed method. In today's class, we'll see the fluctuating capital method. The meaning itself you can understand. What does the meaning of fluctuating? Which means it will be variable, it will be changeable, it will keep on changing as per the convenient, as per the season, as per the partner's will, as per the partnership deed. On basis of that, the capital account will change for the partner. For example, in a partner, there are 5 partners, A, B, C, D and E, 5 partners. Now, one partner died. How many partners left out? We have 4 partners. What will happen? There is going to be the change in the partnership form. There is going to be change in the partnership deed. There is going to be change in the partner's capital account. This is what the fluctuating capital method is all about. That what kind of changes we are seeing in the capital of the various partners. Okay? Let's see the meaning under this method. Only the capital account of the partner is maintained. What account we are maintaining? Only the partner's capital account. In the fixed, we used to maintain 2 accounts, current account and what? Capital account. But here, in the fluctuating, we are just preparing the capital account. Apart from capital account, every other account has been demolished, every other account has been omitted. This type of methods of capital are of variable nature. What does that mean? That this kind of account, the preparation of fluctuating capital method of account is of different type of nature. It is a variable nature. It will keep on changing based on the convenience, based on the season, based on the technology change, based on the taste, based on the preferences. All the economic factors plays a vital role in the fluctuating capital method. Let's see the format of fluctuating capital method. As I told you, you will have only one account. What that account name is? Capital account. Capital account. The format will start with the debit and credit. In your left side, put the debit. In your right side, put credit. Clear? Then, in the debit side, what are the columns you should have? You should have a date column in which you will record the date of the transaction. For example, we have 2018. Okay? Then we have Jan 1. Like that, you have to record the date of the particular transaction. In that, what will the first thing that appear in the debit side of your capital account in the fluctuating method? First, to cash account. To cash account, or it can also come bank. To cash or bank account. In this, what will record is the withdrawal of capital. You have kept the capital in the business. In between, you are withdrawing some amount from that capital. For example, you have 10 lakh rupees as a capital. Now suddenly you need some money. Suddenly you had a work of any money, means you are taking back, for example, 5 lakh rupees. That 5 lakh rupees you should record it here. The money, the capital money, remember here, capital money that you take out from the business will be recorded under a head to cash or bank account. Clear? 2 drawings. Apart from that, the capital or the money from the firm that you take out for your personal use, this withdrawal can be for the office use, can be for the business use. But when you are withdrawing the amount of capital, when you are withdrawing the money of the firm, of the business for your own purpose, for your self need, that is what we call its drawing. Then IOD, to interest on drawings. Drawings, on that you have some interest. For example, if you take a loan from the bank, what the bank people will do? They will charge you the interest. In the same way, if you take the capital of your business for your own need, for that also you should pay the interest. That interest on drawings. Then to profit and loss appropriation account. Profit and loss appropriation account. Remember here, in the debit side, P&L appropriation will be loss. If you are preparing a P&L appropriation account, in that account, if you have a loss on the P&L, you will put in the debit side. Clear? Apart from that, you can have a balancing figure. The balancing figure will be known as to balance carried down. Balancing figure you have, to balance carried down, then you can tally down the account. What are the things we have? We have only limited thing in the debit side. Cash and bank, which is withdrawal of capital. Two drawings. The money that you take it for your personal use. Interest on drawing. On this drawing, whatever interest has been charged. And the loss on the P&L. Only these four items will appear in the capital account debit side. Clear? Let's see the credit side. Same like that, we have a date, particulars and the name of the partner. At least there is a two partner. Why I have written A and B in the partnership? You know the meaning. At least there should be what? Two people to give the effect to the business. We have A and B. For example, any partner, Ram, Shyam, Sita, Geeta, whatever it may be. Two names you should put. Three names is there, three names you have to put. Right? First, by balance brought down. What is this by balance brought down? You can see here, two balance brought down is there, right? This balance will be for opening balance for other month. For example, we are doing for the Jan. Now I am preparing the of Feb or March. What will happen? That will be my opening balance, which means this capital is my opening capital, which was I have kept somewhere. So that opening capital. In the sum, you will be given, in the bracket they will give you whether it's a credit balance or debit balance. Most probably it will be the credit balance. When you have a opening capital or the date of the capital is given, it will be known as by balance brought down, which means opening capital. After that, by cash or by bank. Here also, by cash or by bank. What does it mean? What this cash and bank? This cash and bank we understand withdrawal of money. The capital that you are bringing out from the business. That is cash and bank. What this cash and bank means? This cash and bank means additional capital introduced in the business. Already you had a 10 lakh rupees in as a capital. Now, another 5 lakhs you are putting in the business. You are putting in the business. That will come under the head by cash and bank. Both are capital only. Here, you are putting the capital. Here, you are taking the capital. Clear? Next, we have interest on capital. When you put the money, for example, if you deposit your money in the bank, what the banker do? They give you the interest. Right? You, for example, you have a 10,000 rupees in a one bank account. After 2 or 3 years, so definitely you can see that there is an increase in your account balance. What does it mean? It means that you are charged. You have got some interest on that money that you deposited. In the same way, when you introduce your additional capital in the business, for that you are going to get the interest. That interest you are receiving by salary account. Whatever salary you are paying to the other people. By commission. Any commission for the services that you are rendering. By P&L appropriation, profit. Here, P&L appropriation, loss is there means you have to put in the debit. Profit mean in credit. Simple. P&L appropriation, if it is profit, put in the credit side. If it is a loss, put in the debit side. Clear? Again I am repeating the credit side. By balance brought down, that is the starting, opening capital. By cash and bank, additional capital. By interest on capital, whatever interest has been charged here, that by salary, commission. By P&L profit. P&L loss in the debit side, P&L profit in the credits. After that you have to tally. Okay? You have to see which side is heavy. That side you will have the balancing figure. Most probably in the debit side you will have the what? Your balancing figure you will write to balance brought down, to balance carried down or by balance carried down. Whichever side is heavy you have to put as per that convenience. Clear? Again I am repeating, for writing the capital account. Debtor, creditor. Debit side, credit side. What are the headings you have? Date, particulars, name of the partner. For example, I have taken here A and B. You write the name, whatever name is there. Then date, particulars, A and B. Write all the things. Whatever date is there, write a particular account. If the withdrawal to cash, 2 drawings, interest on drawing, loss on the P&L. By balance brought down, to cash, it's additional cash. By interest on capital, by salary, by commission account, by P&L profit. After that, you have to tally the account. Clear? Now see one sum. Page number 113, question number 4, exercise number 4. We have one sum. Let's see. From the following information, prepare capital account of partners Padma and Padmini when their capital is fluctuating. Clearly they have said. What they are saying? You are required to prepare the what? Capital account of the partners. You are required to prepare capital account. Name of the partner, Padma and Padmini. What is the nature? It is a fixed or fluctuating. They have given you that your capital account is what? Fluctuating. So we understand we have to prepare the capital account. It is fluctuating nature and the partner name is clear. Then the detail has been given. Particular Padmini and Padma. Capital as on 1/1/2018. In the bracket they gave you CR balance, credit balance, which means this is your opening capital. How much? 5 lakhs for Padmini, 4 lakhs for Padma. Then you have a drawings, 70,000 for Padmini and 40,000 for Padma. Interest on drawing is there, 2,000 for Padmini and 1,000 for Padma. Then you have share of profit, very clearly you see, share of profit. What they have given, share of profit, sir, we don't have P&L over here, we don't have P&L appropriation here, where should we put? Profit is there, no, the profit means it's a P&L profit. Share on profit for 2018, 52,000 for Padmani, 40,000 for Padma. Then we have interest on capital, 30,000 for Padmani and 24,000 for Padma. We have a salary, 45,000 for Padmani. For Padma we don't have a salary. Maybe she might be a new employee in the organization. Then the commission. Padmani is not receiving any commission. Maybe she has not introduced any new partners. She has not done any extra work for that. She has not received any commission. But Padma has received the commission for 21,000. So this is the sum that we are going to do it now. Okay, let's start.
Subscribe now and press the bell icon. Never miss an update.